Jacob Roth here on the Rural Radio Network, and we're talking with Darrell Holaday of Country Futures in Frankfort, Kansas, and we're talking on the week of trade that ended on the 28th of July. What did we see in this last full week of July trade on this week?
Well, Jacob, we saw a market that was certainly higher to start the week. It was a very volatile week. The highs and lows quite substantial. Wide trading range. We've become somewhat used to that. As a matter of fact, you could argue that when you have big rallies, you probably ought to be selling something, and when you have big breaks, you ought to be buying something, and that's really what you see during the week. We started the week higher to sharply higher on, again, continued concerns of Russia-Ukraine, but which was probably the dominant factor. Yes, you could argue it was the heat, the concern for the heat that was seen in the plains and was going to get into the corn, but did get into the Midwest as we got into mid to late week. But that was pretty well known before we got to Monday. Once again, we just had more shelling in the Odessa port by Russia, and that was probably as big a concern as any as we started the week. Now, as we moved through the week, we still had to deal with the concern about the heat and the dryness. Well, we did see moisture, different spots, rains occur as these ridge runners come over the top, and they're very hard to predict, and the models didn't do very well trying to predict them out very far anyway. But in addition, you did see the Russia-Ukraine situation kind of calm down a little bit, especially in the latter half of the week, and as a result, we saw a lot of the markets retreat, and in the end, we ended up lower across the board. So we started the week substantially higher. The other factor that certainly was there in the soybean complex is we had really good crush margins. You take the cash values of beans and meal and the oil, they had very good, positive, strong crush margin, and there was kind of a play to try to squeeze the shorts in the August beans because of the idea with that big a margin that the processors are going to be out aggressively buying beans. But ended up maybe that was a kind of a backlash because we did see the big run up in August beans trying to squeeze them, but they didn't seem to get squeezed because I think they already have a significant inventory of beans and didn't really fall into that trap. And boy, we saw a major reversal. As a matter of fact, we saw August beans close about 80 cents or almost $1 off their highs that occurred midday Thursday, and a reversal in less than 24 hours. And that tended to put some weakness in the overall soybean complex, at least late in the week. We did see spring wheat yield was out in North Dakota this week, 2-day tour, and they did come back at 47.4 bushels the acre. It was a little better than anticipated. That would be a little below last year, or it'd be a little below last year's actual yield of 50, but this tour usually underestimates it. I think the bigger pressuring influence from that tour was the most anticipation going in, I think, was in that 42 to 45 bushel the acre area, and so the number was a little bigger than anticipated. Did see good strength in the crude oil, stronger. Matter of fact, closed the week over $80. At that 80.58 level. That was certainly supportive at times in the grain sector, but we saw a major move back and forth in the soybean oil. As a rule, the soybean oil has struggled, staying as the August soybean oil under pressure, just like we saw in the August beans and even the August meal late in the week. On the week, September corn closed at 521, down 6 on the week. December corn was also down 6, closing at 530. August soybeans down 14 at 1487 with a high on Thursday of 1580 to make that comparison. November soybeans 1382, 20 lower on the week. September Kansas City wheat down 4 at 856. Once again, that's after pushing back up against $9. New crop July 832, 13 higher on the week, so we saw a big drop in that old crop new crop bull spread. September crude closed 80.58 up 351 for the week. Cattle futures edged lower, not about a couple dollars lower on the front end. On the back end, not so much. Once again, the cash was steady the week with some exceptions out there. The choice beef tested the 300 level support as we've seen that seasonally continue to work lower in what we call the dog days of August. Cash trade just continued to be, though, very stingy. Packers trying to cut slaughter levels as they don't want to have to chase those cash market and trying to support the overall cutout value. Cattle feeders not real interested in selling lower, so it becomes somewhat of a standoff, and we're not seeing a large volume, and as a result, we're also seeing lower slaughter levels, but still the captive supply numbers in the South continue to grow just a little bit as compared to 2 to 3 weeks ago. All futures were higher as the index continues to move slightly higher, now moving up near that 106 level, but showing some signs of toppiness, certainly not seeing those big gains that we have seen. Once again, seeing some weakness in the overall belly market this past week, as that seasonal high seems to have been in right now in the belly, and that's been the primal that was pushing the market higher for the last 3 to 4 weeks. August cattle closed at 178.15, down 187. The October cattle 179.60, down 230. August feeders 30 lower at 245.60, but the October contract closed unchanged on the week at 251. August hogs 103.20, up 253, and the October hog contract closed 85.02, up 77 on the week.
Thank you. And again, that was Darrell Holaday of Country Futures of Frankfort, Kansas. You can give him a call at 1-800-292-4038. Again, that number to call, 1-800-292-4038.